Hello, welcome to CDH's Cross Border channel, YouTube. My name is Ko Fujimoto. I'm happy to be here today. I am going to talk about a major pitfall of US-Japan inheritance. Inheritance transaction involving US and Japan. Specifically about appreciated assets. Because Japanese tax does not have a step-up basis rule. It's a very interesting topic, I hope. I hope you enjoy this video. So, that's why you must know. Okay, so first, this US resident, unfortunately or fortunately, everyone passes away. So let's say this person passed away and he left appreciated real estate, appreciated, let's say, securities to his heir. So the two assets type, the real estate and the securities, both appreciated tremendously. So these assets go to a person, maybe a child, or could be a spouse, or could be siblings. But in this case, the scenario is this person lives in Japan as a Japanese resident. Okay, nice cherry blossom and nice picture enjoying, spring cherry blossom season. Okay, that's nothing to do with the tax concept. Anyway, so if this person received appreciated real estate and appreciated securities, he has to do two things. One is, if he doesn't have to do, that's great, but the first one most likely, second one for sure, okay? One is he has to sell appreciated assets in order to pay the Japanese inheritance tax, okay? Like I said, if he has a lot of money and can pay for the inheritance tax without selling the appreciated assets, that's wonderful. But in this case, let's assume that he has to sell and the assets and pay a Japanese inheritance tax. Well, let's take it back a little bit here. If this person, or if I think this person, I put it as a child, but if this person is a US resident, and this gets a little bit complicated, he's not subject to the Japanese tax rule. There is a so-called 10-year rule. 10-year rule. This person must not be a Japanese resident looking back up to 10 years. Okay? That's details of that rule is beyond the scope of this presentation, and obviously I am not the Japanese tax or Japanese Japanese. I don't hold the Japanese license. Let's put it that way. I only hold the U.S. CPA license, so I'm not the best person to explain how this 10-year rule works. But let's say, okay, if the child is a US resident, the US has a unified credit, and also the deceased or estate must pay the inheritance or estate tax in the US. So if the person lives in the US resident, then most likely no estate tax because of the unified credit of 12.5%. 2.06 million. And even if he sells these appreciated assets, no capital gain taxes because of the step-up basis rule of the United States. Fair market value at the time of the death becomes the new basis for this survived, the person who lives in the U.S. Okay, having said that, let's get back to the original case here. If this child is a Japanese resident, that's not gonna happen, and I will explain. So this person, Japanese resident, same person. He's a resident of Japan. He received the assets. Doesn't really matter where the assets are because he's a resident of Japan. The Japanese government covers entire world, wherever the asset is located. At the same time, its exemption is extremely low compared to the unified credit. I can't calculate let's say $1 equal 100 yen, which is 30% difference from today's exchange rate. Today is almost like a $1 equal 130 or 135. Japanese yen got very weak recently. But anyway, let's say if it's $1 equal 100 yen, the exemption starts at $300,000, and if the legally designated heirs, let's say if there's one person, according to the Japanese tax law, if the legally designated heir is one person, then $60,000 plus $300,000. So $360,000 becomes a basic exemption. If the heir is 2%, 60, 300, so 420,000. I'm sorry. The amount anyway is far below than the 12.06 of U.S. unified credit, which means he ends up paying the inheritance tax anyway. And I think lots of people, obviously, because of this low inheritance tax exemption, a lot of people pays the inheritance tax in Japan. Right? Inheritance tax is due. And the second is there is no step-up basis rule in Japan. What do you mean? So it means when the person, when the deceased, when he passed away, fair market value of the asset doesn't mean anything. The purchase price of this Japanese resident becomes this child's, for this child, the new basis. So the cost simply transfers to the heir, and that's the rule of Japanese, in this case I think income tax or capital gain tax. So what's going to happen is, because this person has to sell the assets to get the cash to pay for the inheritance, but he also has to pay capital gain tax in Japan. So inheritance tax due and capital gain tax due. Well, I took this free illustration from Yahoo Japan website, and it's I want to show this is a double punches here. Okay, so So you see the difference? If the person lives in the US, no taxes. Then if the person is a resident of Japan, there are this double punches of inheritance tax due and the capital gain tax due. What can you do to minimize the impacts? But before I go on, I want to kind of clarify or re-clarify one more thing, because heir pays the tax in Japan, not the estate or deceased in the United States, right? So for the Japanese inheritance tax, heir pays the tax. Please remember this. So let's talk about a little bit about how to minimize the impacts, potential solutions for the pitfall. And this is a great information that I got from the seminar that I attended, I think 2 days ago. So let's make sure U.S. resident keeps the cost information of the real estate and any subsequent improvements, because in Japan there is no step-up basis rule. So number one, you need to know, heir needs to know the cost. Number one. Two, you don't want to pay too much unnecessary high capital gain tax if you keep the good record of improvements and increase the basis of your property, especially if you know that heir would be a resident in Japan. Right? It makes sense? Makes sense. In the US, if my son who lives in US receives my house, I don't care, because the fair market value becomes his basis, right? You see the point? Same thing, make sure US resident keeps a record of cost of securities. So if you are active trader, I am not. But if you're an active trader, or let's say if your financial advisor buys a mutual fund for you, let's make sure your advisor knows that he or she needs to help you. Because if there's no cost, what can you do? I'm sure there is a special rule in Japan about what to do with this type of situation. The situation meaning you don't know the cost information. Okay, heir doesn't know the cost. Okay. Anyway, well, obviously this creates a lot of work, but it helps your heir. Use the U.S. Japanese gift tax rules to gradually shift the assets to the person in Japan. The U.S. has an annual gift tax exemption. Japanese gift tax also has an annual exemption. It works a little bit differently, but because in this case the donee, the person who receives the gift, lives in Japan, the Japanese rule of gift tax also covers the transaction. So you gotta be compliant, or you gotta keep clear. You gotta you have to clear two hurdles. And set up a living trust here. Make sure that asset goes to Japanese resident without a probate. It takes time, and even if he wants to sell the assets to get the cash, well, if the probate is still going on, he can't sell the assets. That his inheritance tax in Japan becomes due. Monetize the assets in the US, make it cash, and transfer them to Japan and keep them there. I mean, obviously some capital gain may happen here, but it could be one of the options. And others are I'm sure there are many options, but including contacting us for advice. a little bit of a sales pitch here. Okay, this is our disclaimer. And CDH cross-border family practice, we are always looking for new team members who have the same passion about living cross-border life. Not only, US, Japan. I am talking about US and other countries. Even for US citizens may want to live elsewhere. That's a cross-border family practices clients. So if you want to, dig in this very narrow but highly specialized area, please contact us. We're looking for people with the same passion. This is a book that we published last year. We're going to publish a new book, 2022, in English and in Japanese. And someday, I want to publish it in a different language, maybe a Chinese. Okay, good to talking to you, and I hope you enjoyed this video, and see you next time. Take care. Bye.